Good morning from the For the CME. This is Chris Robinson with your Traders Exclusive comment today. We're going to talk livestock and also going to talk the grains. Today is Fed Day, and a whole ball of wax. We'll see if Yellen was to raise rates. You got to think that would be supportive for the U.S. dollar. Higher U.S. dollar might put some pressure on our exportability. Really, want to go back to the grains though. This has just been a fund-driven market. I've talked about this since last January, February, March. Talked about bottom fishing. We've seen a $3 rally in soybeans when there really isn't a huge justification for a $3 rally in soybeans, other than the fact the funds have wanted to own it. We had a little bit of issue with Malaysian palm oil. We had a squeeze in soybean meal. So, long story short, look at the new crop option, which is November. That's the beans that are being planted now. That's really where there's probably going to be a lot more interest. The old crop is the September option, July-September option. A lot of people like to watch the July Nov spread. That's been very, very volatile. It's been moving like a flat price. That can give you a lot of opportunity, but you really have to know where you're going to go if you're wrong in the July Nov spread. Moving forward, I'd say to probably stay away from July and trade more on Sep or August beans, just because that's where the liquidity is going to go. Still, this has been a fund-driven market. They're long about 235,000 contracts of soybeans, about 220,000 contracts of corn now. So they're building this position. Now, could they put more into it? Absolutely. A lot of it is going to be focused on the next 3 weeks. Corn between now and July 22nd, July 30th, will be going through pollination. So you've got the boat leaning very, very far to the right towards a continuation in the drought. Overnight activity. Very interesting to see September corn make a new one-year high, but then every time we make a new high, there's some selling pressure that comes in as guys try and sell the top. I would look at a chart of new crop corn. 3 months ago, we were worried about farmers not having profitable levels at all for corn for 2016. On an 80+ cent rally from the contract lows, last night we got to 448.5. A lot of farmers really are dying to sell 450. I don't know if we're going to get that last penny and a half or not. It'll depend on the weather forecast, which is going to come out in the afternoon here. So the grains are giving you good opportunity. You've got to be aware of where the funds are trading. At some point, we're going to have a nasty correction. A lot of people have lost a lot of money selling highs all the way up, though, in corn and beans. You sell it, you get stopped out. You sell it, you get stopped out. I would say, if you're looking to try and catch the downdraft, that's your best choice. If you're trying to catch the flush when it comes, you're going to have to be willing to get short, take a loss. Get short, take a loss, in the hopes that finally, when the market does roll over, we get a correction that you're on it, going with it. Very briefly, with what's going on in wheat. Wheat is kind of the redheaded stepchild of the grains. We have a very good crop, which is being harvested now as I speak. We're going to be harvesting here for the next 4, 5, 6 weeks across the country. Early yields are very, very good. That's putting pressure on the fundamental story, because there's plenty of wheat in the world. Our wheat's the most expensive, and so the American wheat producer has got a headwind in front of them. I would watch very, very carefully. If you pull up a chart of July Chicago wheat, there's a long-term trend support underneath at around 458, 460. A lot of bears have their eyes on that market. The interesting thing is we've bounced off that several times in the past 3 weeks. So that trend line may be something you want to look at moving forward. And then finally, what's going on in the livestock? We've got kind of a languishing market in cattle, but the chart I want you to pull up is live hogs. And you think, live hogs, that's not pork bellies. It's not pork bellies, it's actually live hogs. Live hogs have been on a nice trend higher. They've been going with the upward move in commodities all year. Again, we've almost gone vertical in the last 2 days, jumping through key resistance. And that's something I think moving forward will give you opportunity. Certainly if you're a producer, you need to be very, very thankful here, and you need to be taking some downside protection on the animals, because you've had a good rally here. The Chinese have been active buyers. supporting the demand for pork. That is their protein of choice, really, and we've seen them consistently step in and being buyers here. So all that in a nutshell. We'll see what the Fed says today. A great rally, fun-driven. Will it continue? It really depends on Mother Nature and the weatherman. Lots of opportunity. If you want to talk about it, look me up on the web, Chris Robinson. Have a great day.